All right. So hope everyone's having a good day. It is Tuesday, May 2nd. We had some news today, but biggest thing today is I did not take a trade. Again, we just had a trend day, big sell off on ES and NQ. Didn't get any really play that I wanted to. I was watching to see if we would get some sort of play down here once we swept that low, but we just continued to sell off, and then I ended up getting off, and then we kind of had a recovery bounce later in the afternoon. So biggest thing in this charting session, I won't take up too much of your time just because there's not really much to look at price action wise from today. It was honestly just, yeah, it's just straight down move and then, recovery bounce. That's just kind of up. So most thing I want to talk about is going into the rest of the week. How does this change the charts, right? How does our bias change now? So first thing I want to look at is the 4 hour, and looking at a 4 hour time frame. We can see that we've swept that internal high here, right? Because we still have not yet taken out this 4208 level on ES. And that is what in my opinion, I think that is still the draw on liquidity. If we were to zoom out to a weekly, right? A weekly time frame, we look like we most likely want to, take that up. We have a big, strong bounce. We're in an uptrend here. I want to see us continue to hold here and potentially bounce back to the upside to take out that buy side level. So going back to a 4 hour, we're selling back off, just swept this low. I want to see this be the low that we put in, or that we put in, and now we head to new highs. So we could end up selling off, right? We just took that this buy side level here. We could see now a retrace to honestly come back down to take sell side at this level. But I would much rather see upside here and see that external level taken first. If we look at, 1 hour, we can see we've swept that liquidity level. Let me see if there's any sort of, again, there's not really a lot of action here to base off of. It's just kind of a big up move. That's why I don't really like the action that we've been seeing today, because there's not really a lot to base anything off of. So again, a lot of my bias going into tomorrow is going to be once we get that pre-market action, and whatever I see in the overnight session, that's what's going to form my bias tomorrow, especially because we do have news. Let's check news going into tomorrow. It is Wednesday, so we have non-farm payroll unemployment claims 8:15, so right before the open, and then we have FOMC at 2 p.m. So I'm still deciding. I should probably decide right now if I want to trade tomorrow or not. Since it is FOMC, I'm honestly down to do a live tomorrow morning, and then I might also do an afternoon session. But I will say this. I will preface, we will be lowering our position size tomorrow, most likely. We want to be careful, especially trading on FOMC days. A lot of the time, I will just not trade FOMC. But since I am with you guys, I do like to get on the lives and just watch the price action. But always remember, FOMC has added more risk. A lot of the time, you're going to get faked out. Price action is not going to be favorable. That's why a lot of people just sit out FOMC days. So, but I do want to educate. I do want to watch the price action, go over it, and then we could also do a afternoon section and actually see what happens during FOMC. Because I'm not going to lie, I do want to trade this small account challenge during FOMC because I want to trade micros and see if I can catch a move. Bounce might take out buy side liquidity, could take a while, right? FOMC has called massive sells off in the past. Yes, it could. Again, anything can happen with FOMC tomorrow. That's the thing. We could honestly sell FOMC and go right through this level and head all the way back down to like 4,000, or we could get a big bounce and automatically, bounce back to new highs and see 4,220 or whatever it is tomorrow. Can you check if there was an entry for long around 936? Yeah, was it on ES or NQ? 936 NQ. Okay. Are you saying this fair value gap? I'm guessing. Short. $9.36. Is that not it? $10.36. Gotcha. Somewhere here. Or no? Paper trade during FOMC also caution lots of funding companies don't allow it. Yes, that as well too. $12.30. Okay. $12.30. Somewhere here. Yeah. Okay. So looking at this, we have, right, we swept that external level. We're pulling into bigger time frame for a value gap. We have internal swept. Looking at 1 minute here. The only entry that I honestly see here would be this, is once you get these equal lows swept right here and you get a displacement candle, this would be the only really long thing that I see is a long here. And like I don't even know what you would target here. Stop would be whatever at the, I mean, I wouldn't even risk that much because it's not even worth it. I don't even want to, I wouldn't even want to trade this, like, just because the action. I wouldn't even want to, I wouldn't at this, again, after this happens, I'm not even touching the market. After I see this, I don't even care what happens the rest of the day. Displacement, meaning it's a big candle. Displacement means it's displacing through a level. Any examples? So if we were to look at a market structure shift right here on a bigger time frame, like a 5 minute, this is when this is displacement, right? Because it's not like we go, right above this level, sweep it and then head right back lower. We like get strong pressure going through this. And that's not even really strong pressure, but it's, we're going through it, right? We're having displacement through this previous high. So notice how here we never got displacement through this high. We ended up just touching it and then selling back off. Do you have a promo code for FFN? We do. I'll send you it right here. I'm making a channel for it too right now. We have a prop firm channel in the Discord now, so I'll be posting stuff in there. Taking a look at NQ going into tomorrow. Again, we have this 4-hour breaker block that we're coming back into. We can see that we just bounced off of it. Now NQ's honestly looking really good. NQ looks like we could potentially see more short. I honestly could potentially see this happen. And the reason is because we've swept that external high, big sell off through in the range, back down. I could see us potentially pull back to this fair value gap here on a 4-hour time frame. I'm going to keep in this one right here. I'd want to see this inverse fair value gap play out now, and then head potentially lower back down to see sell side. But we'll see what happens. Again, no strong bias going into tomorrow. If I had to choose anything, I'd say I'm more long biased than I am short biased. But again, it's FOMC. We'll see what happens in the overnight session. Can you explain what 0 DTE is? I'm guessing that's what you meant. Or 0 TE or 0 DTE? Zero TE 0.7. Yeah, that's options. It's you're talking about open trade equity. Or you're talking about 0 DTE, which is 0 days till expiration. Yeah, we trade futures. Isn't it some sort of retracement? Oh, wait, are you talking about a fit? Wait, optimal trade entry. That's what he's talking about. Okay. I was like, what the hell? Okay. Uh, it just stands for optimal trade entry. It's different. I don't really use it, to be honest. I've never don't really use the term. Is there a minimum you would recommend to trade with on futures? Now, I'll always recommend starting with a prop firm account. And the reason I always recommend starting with a prop firm is because before you put actual live money on the line, you should be able to prove to yourself first that you can actually grow a funded account. Because if you can't grow a funded account, then you can't expect to grow an account with actual, live money in it that you're trading. So prove to yourself you can actually grow an account for a month. Once you can have consistent growth for a month, then that shows you're able to open up a live. Because if you open up a live account, you're probably going to lose it. So work on building good habits and building consistency in a funded account. And then when you build that confidence, you can open up your main account. Once you open up a main account, I recommend probably around, $2,000 to $5,000 is my recommendation to start out. Yep. Not gonna lie, if prop firms are working out well, yeah, exactly. You could stick with a prop firm too. I mean, that's honestly so my plan right now is I used to trade on my main account, and then I used to trade on a prop firm with Apex, and then I used to trade on a separate account. But right now I'm doing a funded futures network eval, and I'm probably going to be trading on that when I trade on the lives. I'll probably be mainly trading on that because it's a $250,000 funded. So I plan to hopefully up my size with it if I'm allowed to. I'm not sure, and then just keep that going. So we'll see. Nice, Zane. Oh no! Oh, okay. Just my goal. Yeah, do it, bro. Make it happen. All right, guys. Any last questions? Again, not really a long session tonight. Keeping it quick. Again, action today was just straight down. Wasn't really having it today. Still up. We are 1-0 on the week so far, so we'll continue to see what happens. I have one. Let's hear it. If you go to daily, ES or NQ? NQ, okay. I know candle shape doesn't mean anything. But like, doesn't Monday candle scream reversal? I mean, yeah, you get a doji. I mean, you get kind of a doji candle right after that liquidity level was swept. So for sure, you could definitely, treat it like that. And you can see that we got that model on a smaller time frame as well. Do you mark in midnight opens? I don't really mark in midnight opens now. I mark in weekly opening gap, but I don't really mark in daily. Any last questions? Feel free to ask anything. Anything you've been struggling with, or this marks my first month with the Discord. Learned a lot. Hell yeah, Zane. I'm glad to have you here for that long, brother. Hoping you're continuing to learn. Glad to see your progress. Keep being active. Keep asking questions. Let me know how your journey's been going every day. Are you going live in the morning around 2 tomorrow or in turn 2? I might do both. I think I'm going to do both. I keep getting big losses and small wins. Okay, let's talk about that, Oscar. What do you think the problem is? And then I'll say what I think the problem is, just based off of what you say. I want you to think about if you have, big losses, small wins, what's the root cause of it? Not following stop loss. Okay. So for you, do you think that how are you going to fix this? How are you going to fix this problem? So you don't follow stop losses. Your losses are bigger than your wins because when you see a win, when you see some type of green, you want the satisfaction of that trade to be right, right? You want the satisfaction. So you take it off instantly because you want to be right. You want to have the feeling of being like, hey, I actually had a winning trade. But when a trade goes against you and you're in the red, that psychology is taking over and you don't want to admit that you're wrong. So then you don't follow your stop loss because you're afraid to accept the risk that you're putting on the table. And you always try to find a reason for you to stay in the trade when it's the exact opposite for if you're in a winning trade. That's why trading is so psychological, because humans, we are greedy. When we see something, we take it. When it's against us, we pray that it comes back to us, right? Because we don't want to admit defeat. So as a trader, Oscar, my recommendation for you is two things. Number one, you have to work on your discipline aspect of it. If it touches your stop loss, you have to take it off. That's why I'm saying put it in your DOM. Do not do a loose or a soft stop. Put it a hard stop in, meaning you have a limit order in your DOM that you do not touch. If it comes to that, it'll automatically sell it for you, right? You have to have the disciplines to be able to take it off when it hits your stop loss. Number two, you have to lower your position size because it seems like you're not accepting that risk. You're afraid to accept that loss and get stopped out. So lower your risk and build the confidence back up while, you're getting your edge back on track. Also, I have been in here for like 3 weeks. I have learned so much just from watching you every day on how you chart and your patience you have. I just want to say thank you, man. You really are great at what you do. I really appreciate all the time you take. Question really helps. Much love, Robert. That means a lot, brother. I'm glad to have you here for almost a month now, man. Keep working hard. Again, any questions you have, always come to me. I'll always be able to help you guys. After liquidity sweep, how can you tell if it will go up / down to sweep buy side sell stops or filling in a balance fair value gap then bouncing? After liquidity sweep, how can you tell if it will go up, down, sweep buy side sell stops and balance fair value gap then bouncing? Okay, good question. So that's why there's a checklist that I want to see, right? If first thing is I want to see some high or low get swept, right? That's the original liquidity sweep. Now, once that high gets taken out, I want to see how the market is reacting to it. Are we going through the level? Are we, slowing down at the level? Are we instantly rejecting it and getting selling pressure back into the range? What's kind of telling me what's going on here? Like, for example, and we have to take into account whatever the time frame is as well. Is this, a 1 hour high? Is this a 15-minute high? Is this a 4-hour high? Right? If we're looking at this is a 4-hour high here. So we have to take into account a 4-hour or a 1 hour, how are we reacting at this level? Okay. Well, this is showing me that we've swept this high and it instantly sold back off, right? We cannot seem to close above this level. We took it out and then instantly sold back. And then we came up one more time, still broke above that level, sweeping one more time and cannot break higher. And then we sold off more. So this is showing me that we're most likely now going to take the next draw on liquidity. So now that we've swept also internal buy side here, right? That previous high that was created, we created a high here and then a low and then a new high. But since we swept that external high and the internal high, and we have displacement back into this range, the draw on liquidity then becomes that next sell side level, which was this low right here, right? So we have external swept, internal swept, a displacement back in the range. We can't seem to break higher. And then we get that move to the next draw on liquidity, which is that sell side level, that most recent low. Can you post a checklist on what else we should look for when looking for A plus? Liquidity sweep, market structure shift with displacement, strong volume, retrace to fair value gap, get it on sale, price target is next, liquidity. What else should we add? What's missing? Okay. So number three does not need to be Bookmap. Honestly, does not need to be on Bookmap, to be honest. You could probably take that off. Strong volume, I do want to see, though. I want to see consistent volume, more like that. I want to see consistent volume. Doesn't have to be like in the same amount of volume, but consistent. Are we, starting to chop, or are we getting, fluid action is what I like to say. Fluid action, meaning, we're having just, consistent movement. Retrace to fair value gap, adding on to that, retrace to breaker block is A plus. If you get a breaker block and a fair value gap, that is the best thing you could possibly have. Number 5, price target is next, liquidity. For an A plus setup, that liquidity, or whatever that area is that I think the draw, if it has equal highs, that adds even more conviction. Now, an A plus setup here, I will literally draw you an A plus setup right now. I'll draw right here. You ready? All right, so that's external level, right? So we kind of have like a low here, put in, and then we bounce, and then we take a high, and then we, come down. All right, so external level swept, right? Internal level swept. Break of that structure, pull back to fair value gap and breaker block. Oh, wait, I kind of fucked it up, didn't I? I fucked it up. Hold on. I fucked it up. Give me a second. All right. Let me try it again. This is a screenshotable model. Let me draw it so you can screenshot. This is the model, right? This is like A++. Like, this is like a 95%, trade that works out that, okay. So, okay, we have a low put in, boom, 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 high, boom, 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 and then we sweep, and then internal, and then break, and then fair value gap, targeting equal highs. Okay. So you have external swept. You have internal swept. You have market structure shift. And then you have a breaker block. As well as a fair value gap. Targeting 3 equal highs. There you go. That is A plus. A plus plus. Oh, wait, actually, hold on. It's not A plus plus yet. There you go. And there you go. A plus 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 setup. I'm new to this. Is there anything I should do to get more familiarized with the language? Watch ICT 2022 mentorship on YouTube. ICT 2022 mentorship on YouTube. Have you seen a setup like this? I have. I actually have. I've probably, now it is pretty rare to get like as perfect as a setup as this. But it has happened. I have again. I'd say it's probably like, I mean, it's probably more often than you think. You just got to find it, right? Like, I'd probably say you get something like this. I wouldn't say exactly, but I'd say something like this probably like once a month, I guess. Is it wick to wick or just the body? I go wick to the bottom of the body. So whatever the top is to whatever the bottom of the body is. Top of the wick to the bottom of the body. Please explain breaker blocks. I get that confused. I know order blocks. So a breaker block, let me find an example here. Let me screenshot this so we have it, and then we can always come back to this. What a triple A plus setup looks like. A plus plus. Okay. Boop, 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 boop. Let me delete all this shit. So let's see if we can find an example of a breaker block. Now, first one would be, I guess, not really much I can draw in here. Most of the time, they're on smaller time frames. I'll see if I can try to find one. I'm just going to scroll back in price action here, and we'll see if I can try to find something. Let's see if there's something here. So we have a low here. I want to look at a bigger time frame now. Not really anything there that I see either. It's kind of hard to find an example when there's not really anything here. Can you draw a breaker block after showing us one? Yeah. I mean, I can't really draw. It's an order block. So if you know what an order block is, right? Like let's start out there. An order block. Now, a lot of traders are going to, differentiate what an order block is. But in my opinion, an order block is, you get a big move up and a big move down. So like this right here, I would consider an order block, right? You have this whole area, right? You get a big move candle up, big move down. So a breaker block is when you break above that level with big displacement after sweeping liquidity, right? So if we look at that model I just drew it in, let me pull it back up again. Right. Once we sweep liquidity from that external level, if I can load, hello. There we go. Once we sweep that external liquidity, and I see a break of structure, right? This is where that order block would be. I would get a big move up right here and then big move down. And then once we break above this, I then pull it over to the right, and then it should act as support once we break through it. So previous resistance then acts as support once we break through market structure shift. If we can get a breaker block and a fair value gap that align with each other, that's what brings us an A plus setup. Now on a chart, I will show you a video just so I can get an example. Breaker blocks. I'll show you a T-Trades video or whatever. Here we go. This is what a breaker block looks like. So here we go. So, right, market structure, this is your liquidity being swept at the low. Once you get a bounce, right, this would be our market structure shift at that high. Once we then break through this high, I want to see big displacement, right? See how we break through it, and then we come back down into this area, and it acts as support. That's what we want to see. Notice how we also have a fair value gap here. So we have a breaker block and a fair value gap. So we break above it, retrace back into that fair value gap, as well as that past breaker block, continue to hold, and then we get a buy model formed from there. Equal highs then? No, they don't. They don't have to have equal highs. Had some pretty good examples in the past. I don't know where they are. I guess I could say this potentially. So you have liquidity swept from this low. So what's my previous high? Right here, right? So market structure shift. Notice how we have big move up, big move down. Take the top of that candle. Notice how every time we come back to this level, right, we continue to bounce. So after this is right, we sweep liquidity, we break market structure shift. The next draw on liquidity is that previous high, which would be this. Notice we pull back into this breaker block, continue to hold, and then we bounce up to take that previous buy side liquidity, because that's the draw. Where would you put your stop loss entering on a breaker? If I was to enter here, I would put so again, I would enter off of the breaker block and a fair value gap. So we also have a fair value gap right here. I also want to look on, again, this is like 1 hour, so I wouldn't really trade this, but for price action's sake, let me look at the 4 hour. 4 hour doesn't really show me anything. Oh, we do have a 4 hour fair value gap here as well. So where am I? I gotta go all the way back. Okay. So if I was to enter off of this targeting buy side liquidity, I wouldn't want to give myself too much room. Now I know a lot of people trade it differently, but a lot of people would put their stop at but like that, there's no reason to do that, right? A risk reward is absolutely, terrible, right? You could let a runner go to that buy side liquidity, which would be the next high, which you should probably do anyway. But for me, I would put my stop at whatever is going to invalidate this trade. So for me, since there's no really like fair value gap here, I'd want to look at, back at a bigger time frame. So if I look at a 4 hour and I go back to this level here, I normally like to place it at the previous wick of whatever that fair value gap was. So since we do have another fair value gap here, it's pretty hard to get the best risk. But again, I would want to see us continue to hold this. So since this is what I'm actually trading off of, I'm trading the breaker block and I'm also trading this fair value gap. I would put my stop at whatever the previous wick of the fair value gap I'm trading. And in this case, it would be this wick right here. And that gives me the best risk to reward. And that's going to be the best thing to hopefully not invalidate my setup. Because even though we broke through this level here, we continued to hold this, which is fine. You like to draw from wick to bottom wick of candle. Is that correct? Or wick to wick? Yeah, I like to draw of wick to whatever the bottom of the candle is. And if it was like, if I was, flip this chart, it would be right, the bottom of the wick to the top of the candle, right? Like that. All righty. I think that's all I have for you guys tonight. Enjoy the rest of your night. I will see you all tomorrow morning for FOMC. I will probably be trading in the afternoon as well. We'll see. I'll still making my mind up on it, but we'll see. All right. Enjoy the rest of your night, guys. And I'll see you tomorrow. Peace. A gentleman in a scholar tank. Much love, brother. All right. Enjoy your night, guys.